This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. We have seen the corn, soybeans, and wheat really kind of lift off here over the last week with weather concerns looming and planting delays extending. Now looking at corn, a couple key barriers that we're looking at. $4 for that July contract is psychologically significant resistance. On top of that, we have June option expiration tomorrow. We've been telling clients this probably puts a lid on the market. On top of that, we had a conference call with the USDA today, kind of threw a lot more question marks into the situation. We're looking at a potential acre shift, and acres going to prevent. Now those could be coming back on if they want to receive payment from part of the farmer aid program. So we could see those prevent acres go back to a crop, which has put pressure on prices here this afternoon. Now the big key pocket that we're looking at to wrap up the week, 385 to 386. This is the lows this week as well as the 200-day moving average. If we break and close below here, we wouldn't be surprised to see an extension towards 380. From that point, we'd like to be a little bit more aggressive on the buy side for that July contract. Now moving over to the soybeans. Soybeans, obviously, we've been a lot less optimistic on as the trade war or lack of trade progress continues to loom heavy on the market. 845 to 850, psychologically significant, was a gap from the first part of May. Filled that gap and weren't able to get any conviction buyers above there. So we're seeing some producers step in, not necessarily the best price to do some hedging at, but certainly producers taking advantage of that higher price action. Now 820, it's a big line in the sand as we wrap up the week. A break and close below here opens the door for a possible extension and retest towards the contract close that we saw there at 791. Now wrapping things up and moving over to the wheat market. Wheat, $4.95 to $5 was the area, the target that we're looking for. We tried to bump up there. Again, we started this morning's session with positive trade, but a bad reversal. If we break and close below 468 to 470, we could see additional liquidation come into the market and take us down towards the 50-day moving average at 456. So if we were going to play buy one, hold one, and sell one right now, we'd rather be buyers in corn, sellers in soybeans, and holding the wheat future. So that's what we're looking at to wrap up the week. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.